Good morning, SMF Street traders, and good morning to the rest of the world around the world, and good morning to all non-U.S. citizens outside of the U.S. And you're important to us, and we have a way for you to get involved with SMF Street, and everyone qualifies. Doesn't matter what country you live in, you qualify. The SMF firm is a different firm than all the other ones, and so therefore we have lots of programs that you can be involved. You can trade SMF. We'll put trading capital up behind you. We will have you in this live trading room every single day going through live entries and exits. We'll make sure that your trading account has plenty of money in it so that you can trade and make a good profit, so you count. Now, we're going to do the pro and con here about the earnings on RIMM. Basically, when we look at earnings reports, we take a look at the last quarter of what RIMM did. We had a gap down on an earnings here. They re-leveraged it back up. Another earnings report came out, and the new release of their phone, well, it didn't do really that great. So when we look at a contrarian view of knowing what that guidance would be, along with the amount of short interest built up in the name over the last 90 days, is that we are looking at, we're not looking at it, we're trading up above here. This is that $50 area across this ridge here. That's called the up and out of the money volatility trade. That way, if there's any surprises or any big short cover rally, we're in it for the cheap price. We put the tops up here where we were shorting, and basically that's that last gap down off the earnings. We came back up, we filled it in, we've gone down, and over the last 90 days RIMM has gone nowhere because the competition is stiff. Both iPhone, their new phone, and Research Technology is still a good technology. It's still a company that is good company for what it was, but the competition is different. The world changes. And the world changes in gadgets. The world's changed all the time. What I would like to point out is that in after hours trading, we've got that volatility trade. There's a lot of short interest on the name. If they come in even at the lower end of the guidance, but they're not going lower, and they have anything good to say, we're going to see a rally in RIMM. Okay, and we're also taking a look at the hardcore data. The hardcore data is, it is what it is about their growth. However, you try to factor in the current price. RIMM is a good candidate for a takeover target. So by us always being up above the market using options, is that when one of these moves get going, we're in play, and it doesn't cost us very much money to be there. And in a lot of cases, it pays off real well. So the majority of the street is bearish. You got some people that are bullish. We're going to be taking a look at that $50 call right there. We already been buying them. That's where the downtrend started. The short interest trade gets put on. There are times when it gets built in the price in the short term. There's a time where the news can be not so good, but you rally into stock. All the things that we teach you and all the mechanics and all the contrarian thinking and everything that people try to manufacture is the back end, which is the top side, versus the pessimistic part about the growth is true. That's why we made a fortune selling it short down. But now we're looking at, hey, it's time to get long and short both for whichever way RIMM wants to do. But up and out of the money calls are very cheap. So that way, when we apply the SMF Street risk management, we're in play for that big move. Now, what we will be doing, SMF Street traders, in after hours when RIMM reports tonight, any big pop up and any big short cover squeeze that may happen, we would be looking at selling short into any counter trend and any pop that they take the opposite way. So the report could be pretty flat, but then you rally, and that's why we're in play. We already made a lot of money that way. That's from here to down there. And we've been short the name for, geez, all the way back up in 2008 period. Now it's time that the daily moving average is setting up. All the moving averages are very sick and declining, the 20. The weekly chart, which I have over here, and I'm going to bring up for you, is that we're finally trying to put in this long-term bottom that I've showed you many times, and where that price action was being made. And this weekly chart, SMF Street Traders, is to let you know that that support level is down here where this uptrend had occurred. We came down, counter trend, and we started selling short way back up there. This was last year when we were doing that back in the November reporting session. And we rallied on up, but I can tell you that when we were developing this $70 puts over in here, this is the history of the year. But now it's time to look at getting that long. And the thing about RIMM is RIMM, where the current share price is it's a potential buyout candidate. And we're going to be in play. And if I cross here on that percent DS, I'm at 13.46. This is pretty cheap. 11.6, 13.45 is knowing when the short-term volatility is ripe for an upside move, why everyone else doesn't want anything to do with the name. We're looking at getting long for that pop. And that's right here at 49.42 right there. And that's taking the other side of the environment for that pop to the upside. And RIMM's been performing pretty good going into its quarterly earnings. Came down, hit that 45.44, bounced up $1 off of the bottom, been in a nice smooth range all day. It's got some pretty good momentum intraday. Very nice in both directional movements, intraday shorts and intraday longs. More longs buying at support, has been ripping it higher. This is the weekly chart. This is the contrarian view. The thing about it is it's attractive for a buyout. Yes, we will see that many times in the past in our 30-year career is when the earnings are horrible, but the stock goes up $5 or $7. And that's what you're learning here today, SMF Street, is being up there for that volatility trade. Why it's very cheap. Doesn't cost much money to be there.